All right, so let's get into this. So today we're going to be talking about what is the ICT Judas Swing. So in simplest terms, the Judas Swing is a manipulation move. Okay, so what the Judas Swing will do, and it occurs on different time frames. It's not just subject to one time frame. The Judas Swing occurs on the monthly chart, the weekly chart, the daily chart. So what it is, so for example, let's take the daily chart. It would be a manipulation run on the daily range. So then our job is, okay, to look at where that manipulation run is going to occur. What does it look like? What is the signatures? Because what we're looking at here on this daily chart is, okay, we can see we got these daily candles, right? In each of these daily candles, there is a time where that manipulation run happens. So where is that displayed on the daily chart? It goes back to the wicks do the damage, the bodies tell the true story. Let me say that again. The wicks do the damage and the body tells the true story. Where the body closes, where the candle closes tells you a lot more. And what the wicks there, that's pure manipulation. Okay. So what we see here, we're going to take, I want you to look at my cursor. Look at this candle right here. So you see how price opened up right here? Look at my cursor. That's where that red candle opened up. And this is on Thursday of April 18th, 2024. We opened up right here, and then what did price immediately do? It pushed up. You see how like that wick right there, because it traded up above this high right here. That's what that wick represents. It traded above, but it didn't close there now, did it? No, it didn't. Remember, the wicks do the damage. So this thing opens up and it comes up, and what did it take out right here on this push up? This wicky price action that you see right here, what did it come up and what did it take? Well, it did a few things here. It took out previous day's highs, which was Wednesday's highs, as you can see, look, which I'll even display on the chart for you so we're all on the same page here, because you can see there it is. You see that high right there on the green candle? It came up, and then we took that. It ran up above that, the high of that green candle right here on Thursday. It opened up. Remember, it opened up right here beneath it. It opened up right here beneath it, and then it expands higher, and it takes that out. See that? The wick of that candle. Because during that time, this candle, it was still trading. It hadn't closed yet. And it did this. Now, when did it do this? This is the key thing we got to look at here. When did it do this? Because typically the Judas Swing, it's going to happen. I'm talking about from like the daily range, right? We're going to go over a weekly chart as well for the weekly range. Because again, the Judas Swing that happens on the weekly range, it happens on the daily range as well. Like it's not subject to one time frame, as I was saying. But right here on the daily chart, we're talking about the Judas Swing on the daily range first. And you can see this thing, it ended up coming up and taking out Thursday's high. Now, when did it do that? When should you be hunting for the Judas Swing is the next question. Well, typically the Judas Swing, it will be happening after midnight into early London sessions where you want to see it. After midnight into early London sessions where you really want to start hunting for that Judas Swing, where you really want to, that's where that manipulation is going to occur. That manipulation run, okay? And so, because again, like that tension of this, like it's moving in the opposing direction of where price really wants to go. And it's doing that for a few reasons. Like this push up, the purchase high right here, it's doing a few things. There's buy side liquidity residing above that high because it's previous day's highs, of course. And we understand above previous day's highs is buy side liquidity residing there. So we have this taking out buy side liquidity, but at the same time, this thing's ramping up. It's looking very bullish. And what it's going to do? What's it going to do? It's going to create opposing sell side down below. So it's killing two birds with one stone here. It's taking out the buy side, but it's also creating sell side that it can take later on. That is the purpose of it. That's the manipulation. That's where it's found. So you got to understand where your liquidity pulls it. So because that's what gives it validity is the liquidity. What gives it validity is the liquidity. So let's go to the 4-hour chart here so you can see a little bit better. So you can see right here. Let me get replay. So you see how it comes up and it takes Thursday's highs, or Wednesday's highs. You see how it comes up and it takes that. So, and when is it doing it? Like this thing's ramping up right here. If you go to this 4-hour chart, it's ramping up. It's looking very bullish. It's going ballistic, right? And it's coming up though, and it's taking out these highs like right after midnight into London. Very early on in the day that it's doing this. And what we understand, this goes for many other things. Like a lot of times that first move is the fake move. Not always. This stuff isn't a perfect science, okay? There's no such thing as, 100% every single time. That's not trading. But a lot of times what you'll find is the first run is the fake run. So like the first run that you see higher, lower on the daily range, identify if you have sufficient liquidity A lot of times what you'll see is that first run will go to that liquidity and then have a complete reversal, because again, it's taking liquidity, but also it's creating the opposing liquidity, so it can kill two birds with one stone, as I was saying. And it's the same deal with like news. A lot of times that first run for news, as we understand, is a fake run. It's the same thing with like 930 equity bell with futures. A lot of times that first run you see at 930 equity bell, so there's these key times that you want to be aware of, because they're key times. Because this is that time element. Because I always say I do three things. I understand market structure, I understand liquidity, and then we have time. You combine all three, you got the full package in regards to technical analysis. So this is that time element. You got to understand when that manipulation is going to occur. And when you understand it, when you understand what it looks like, you can then navigate it accordingly. Okay? So we understand, okay, we're coming to after midnight into London in that time range. And we're coming up here and we're taking out previous day's highs. That's a big liquidity pull. But not only are you coming up and you're taking previous day's highs, you are coming up into a bearish imbalance as well. A big daily bearish imbalance. Guess what? That's resistance. That's resistance. That's an inefficiency. So at the same time, here's the thing about it. You're coming up and you're taking out that buy side right there, big buy side liquidity pull. But at the same time that you're taking that out, you're rebalancing another portion of this bearish imbalance right here. That's further resistance that you're coming up into. 4-hour chart as well, higher time frame buy side. You see that's a higher time frame level. So you have a higher time frame level. You have all this liquidity, this huge bucket of liquidity being taken out. First things first to begin the day. And remember what I was just telling you earlier. That candle, each daily candle, like this tells you a story. The wicks do the damage and the body tells the true story. The wicks is where that manipulation is, where you would really want to hunt for that. So you can see, and you got to anticipate it, right? Because you look at these candles, like each candle has wicks, each candle has bodies. You can see it comes down and it wicks down and then it expands higher. And it comes down, it wicks up, boom, it expands lower, right? And then just like here, it opens up, it wicks up, expands higher, takes liquidity, boom, expands lower. You want to look for that manipulation, the manipulation found in the wicks, okay? So it comes up and it takes this high right here. It takes that liquidity right there. And you can see we do that very early on. So it's taking that liquidity first things first here, coming to a brand new day. It's taking out the buy side, but it's also going to be creating sell side down below because it looks very bullish, right? And then what do you do next once you kind of see it? Because this thing's very bullish, right? Well, this is where you wait for the elephant to jump in the pool. This is where you wait for, in other terms, you wait for that shift. You wait for that displacement. And then once you get that displacement, that's what you call smart money, like a smart money leaving a footprint, showing their hand basically, right? You don't got to try to catch the exact top, the exact bottom. You can let big money, smart money, whatever you want to call them, right? Because me and you, we're not making these moves. Somebody is, right? Let them show their hand. You can see it ends up displacing lower, and we end up having, well, a shift in market structure. So at that point, guess what? You can look at that and you say, okay, that was our Judas swing. So you can look at this on the intraday chart. It was pushing up. It was bullish. It was consistently putting in higher lows. And this thing ramps up into, look, here's midnight. Look, there's midnight right there where my cursor is. You see that little black box that popped up? Midnight New York. It's when a brand new day starts. And this thing, it pushes up immediately after midnight. It cleans out previous day's highs right away. Asian session highs right away. And it's popping up into a daily imbalance, as we were just saying. It's doing that first things first. That's a lot of liquidity that it's running up into, right? It absolutely is. It's a lot of liquidity that it's running up into. And it's doing that first things first here, and at a key time where we understand manipulation runs occur, okay? And of course, at that time, that daily candle that we just talked about, it's not closed yet, but it's working. And what you see right away is it's coming up, it's taking out that high, it's coming to that imbalance, it's doing that first things first. The wicks do the damage. Remember, this is that wick that because of course, this candle closed at this point. And this push up was that wick. That's where that wick was found. That's where that manipulation was found. The wicks do the damage, remember. And this is where it came up and it took out that liquidity, major liquidity. That's a lot. That's like a brick wall that it's running to. First things first here. It didn't have enough, it didn't have enough fuel to clear that. And then it confirms that with a shift a little bit later. As you can see, we ended up shifting lower. We got the fair value, get all that stuff as well a little bit later on. We got the strong close, and you can see this thing just ended up expanding lower. Because, I mean, it was a bearish shift. See that? That's a bearish shift, and then it just ends up expanding lower and consistently pushing lower at that point. That was manipulation. pure manipulation. This push up right here, that is pure manipulation. And this is the real storyline. The real storyline. This is what Price really wanted to do. This is the real intention, because it already had sufficient liquidity now at that point. It took it. And you can see that's just what ended up happening on this thing. And you go back to the daily chart one more time, just so we're on the same page, because you can see that now that it's played out on that 1 hour chart right there. Again, there's the daily chart. That ended up happening was, again, it took that high and then it expanded lower. The body tells the true story. The wicks do the damage. The wick is the manipulation, because it came up and took that high. And again, that's where the Judas Swing is found. So you want to hunt for it, like right after midnight into London session, early London session is where you really want to start hunting for that Judas Swing. And the key thing is you got to understand what your liquidity pools are. And you got to, again, to time it, you can look for, well, yeah, the time element being what I just told you, but also look for that shift, look for that confirmation. Okay, you know, ICT likes to say, it's like an elephant jumping in a small pool, right? That elephant, it can't hide. Like, it's going to leave a big splash. And all you got to do is listen to it. You don't got to try to catch the exact top of the second bottom. Just look for that elephant. Look for that elephant to jump in the pool, and then boom. And then once you see that big splash, you know, oh, stay there. It's time. It's time. And that's all you got to do, okay? Sometimes you're going to get it wrong, okay? I know we're looking at like this example right here. You know, just flawless. It ended up selling off, right? Sometimes you're going to get it wrong. That's cool. It's part of trading. But again, we don't operate off of certainty. We operate off of probabilities. And if you utilize these signatures and you understand where your liquidity is, you understand you got all these keys, like the shift, you understand market structure, all that good stuff. The time element, you got it down pat. You're playing probabilities. And if you have all these signatures aligned and you know what you're doing, you're going to be correct more times than not. And that's what you call an edge. And an edge is all you need to succeed in regards to the technicals. We don't operate off 100%, and that's what a lot of people want. That's what a lot of people want in this business. And I especially see it like in the SMC, ICT space is, I mean, again, it's not just completely subject to that space. It's really just beginners in general. They want that certainty. They want that. They think this stuff's like a perfect science. It's not. It's not a perfect science. Okay. And I think that is a damaging mindset to have, because whenever you are hit with, because sometimes you can do everything right? Sometimes you can do everything right. You can have everything down pat, every single signature A+, and sometimes you're still going to be wrong. But if you have that mindset of, okay, I'm playing probabilities, and if I take this, if I have all these signatures, and I do that over the course of 50 to 100 trades, that's where your mind should be focused. 50 to 100 trades, I'm coming out on top. That's the mindset of the professional. That's the mindset of somebody that knows what the fuck they're doing, right? That's the mindset that you got to have, right? The beginner is, you know, focused on being right all the time. But you got to hold that mindset. Okay, if I have these signatures, I have an edge. If I really understand this, I have an edge. But an edge doesn't mean 100%. An edge does not mean I'm going to be right all the time. But if I do that and I execute that long-term basis, I'm coming out on top, right? So not to get too sidetracked with the lesson, but I just want to throw a little psychology nugget in there, right? Because it's very important. We talk about these technicals, and I know I mainly do the technicals from the YouTube side, but psychology is more important than the technical side. So you got to have it all down pat, right? Full package. Now we're going to go over the weekly chart here next, because that's what I was saying. Like, that was just one example in the daily range, but we're going to go over the weekly as well. So here's the deal. It's the same type of process. So like that daily manipulation swing, right? It's found at the very beginning of the day, right after midnight to London. Weekly manipulation swing is found at the very beginning of the week. Okay, the very beginning of the week. Same deal. Wicks do the damage. Body tells the true story. Okay, the body of the candle does. So we take a look at like last week, just for example, and we had a bullish expansion. Not, a lot of conviction, but it's a bullish expansion. It closed green. And I want you to look at what price did first here. Okay, so you can see, let's actually rewind a little bit more. So look, it had that big expansion lower, right? Like this had that really big expansion lower on this weekly candle right here. And it displaced beneath these previous lows. That's a very bearish signature, right? It absolutely is. It's an extremely bearish signature because it showed in simplest terms that it did not respect these lows down here. Okay. And so since it didn't respect those lows down there, like what's the next key liquidity pool? Well, when it closes here, it creates liquidity. Okay. Because now we have previous week's lows. Because in here, like we don't have any significant level in there. After it cleaned out these lows, which is a significant level, it didn't respect it. There's no imbalance. There's no other sales liquidity pool in there. There's really nothing else in there, as you can see. See that? But then this candle closes right here after having that displacement, and it creates what right there? What's that right there? Well, that becomes previous week's lows because we're coming to a brand new week. And guess what? That's a big liquidity pool. That's a big liquidity pool. And guess what? We're in a discount marketplace still. So, because even though we didn't respect these old lows down here when we displaced lower, it's still in a discount and it's still considered cheap in this particular area. And now we have this new level to work with. So then look at my cursor. This is where price opens up last week. Look at my cursor. You see that? It opens up right there. And what does it do first things first? Just like we were talking about with the daily range. Remember, don't forget, the first move typically is the fake move. Okay. But of course, you need that liquidity. You need that liquidity to frame it, of course. The liquidity is what gives it validity. If no liquidity, well, if you don't get any significant liquidity, well, then you don't got nothing to frame it. But we do here. Remember, it's in a discount. And now we have previous week's lows right here. It opens up right here. And first things first, early week, it takes that out, which is already in a deep discount, but now it's taking out previous week's lows. Price is going to move in the direction of least resistance. It's going to move in the direction of least resistance. So we have it taken out previous week's lows very early on in the week. That is significant liquidity that can no longer serve as a draw. It's done with. It's taken. It can't serve as a draw. It already has it. It's already purged it. So it is now taken, and it's doing it early on. Let's go to the daily chart to kind of look at it from that perspective now. So where was Monday at? Right here. So you can see it did it very early on. There was that. So we have Friday. It closed right there. It was a really strong close. And what did it do? Like right at the very beginning of the week? Well, we opened up right here, and you can see it comes down within Monday and Tuesday, and it takes that low. It takes this low right here. You see that? It's coming down. It's taking that liquidity. Okay. And look at this thing. It's in a deep discount, isn't it? Absolutely it is. It's in a very deep discount. So we see it come down, and it's taking out previous week's lows, deep discount. And in the very beginning of the week, it's running lower. Okay. You can see that happening. Now, keep in mind, you also got to kind of consider news. You got to consider news as well. Because if you have high impact news, that's why you look at your calendar and you see where your high impact news is, because extremely high impact news, that's a key time for manipulation as well. So whenever you want to factor in like when the low of the week or the high of the week is going to get put in, another, important component to that is where that high impact news is at. Because we talk about how we have the Judas Swing and we have that Judas Swing in after midnight to London. But if you on the days specifically where there's like extremely high impact news, what you'll see a lot of times as well is it'll save that manipulation move for the high impact news, and a lot of times you don't get the best price action in London because it'll save it for high impact news. And that also factors in whenever we're considering when the low of the high is going to be put in the weekly range is whenever that high impact news is. Okay, so like for example, on Euro USD last week we had high impact news right here. So like right here, it was like, I think it was like around 1 o'clock, a little bit after 1 o'clock on Tuesday, we had high impact news that happened, that occurred. And we understand that this is still early. This is still at the beginning of the week, of course. And usually, this is a key time where you want to be hunting for, because you're kind of nearing that area where you can anticipate the low is about to form, right? Coming into after Tuesday, London, into Wednesdays, where you can say, okay, the low, if we have this key liquidity pool, the low is probably about to be formed. But we had this news happen right here. We had high impact news that took place right here. And what happened was, now keep in mind, at this point, it's already taken out previous week's lows. It's done with. It took out that level. I know I kind of drew it off or a little bit off, but you can see right here on Monday, it already took it out. It took it out on Monday right here. It dipped down beneath it on Monday. And then, of course, as you can expect, they're taking out such a big level. It has a push up, right? It has this push up and it creates this swing low level, bullish signature. But then it wanted to have one last run lower because high impact news, key time for manipulation. Okay. So we had that manipulation run lower on Tuesday, and then it comes down and takes out this low. And as I was telling my mentees, I figured, okay, this is not going to hold up likely. It's a fake run, because we understand news is a key time for fake runs. And not only do we have that, but we also already have previous week's lows taken. It's in that discount. It's taking out this now. It respected that level. It's just a completely bullish signature. It's like plain as day that that's a manipulation run, and that's probably going to be the low that's put in as well. That's going to be the low that's put in. Because now we're at Tuesday after 1 o'clock at this point. We've already taken out previous week's lows. We can anticipate that this is likely the end of the Judas Swing. All this down that you saw down here, that first push, this push right here, that's manipulation moves. That's a manipulation move lower. It already has previous week's lows. It's already in a discount, as we've already established. It's already, think of like price, in simplest terms, price needs to breathe. It needs to push up. So we only have that liquidity up above, and now we have opposing liquidity and term range liquidity up above. We have opposing buy side up above. As you can see, it's going to want to draw to, because it has sufficient sell side down below. What does it want to do now after it has that run lower? It has that fake run from news. That's the end of it. Okay, because again, we got to consider what the calendar of the high impact news and when that is, because that's the key time where manipulation runs are going to occur. After that is done with, that first move lower, as we understand a lot of times as a fake run, it takes this liquidity. It now has sufficient liquidity to make the trip up higher. And that's what it does. And then that was that expansion that you saw in the weekly range right there. That was the expansion that you saw, and then it pulls back, pushes back up, and that was the case. So it's the same deal like on the daily, like price is fractal, remember. You get the day, you get the weekly chart, first move lower, beginning of the week, identify your liquidity, understand, are you in a premium, are you in a discount, and then look for those reactions. And then again, you got to consider news as well, when that news, high impact news is going to be, because that's a key time for manipulation. And then you can look for the expansions off these key liquidity pools. Look for that elephant to jump in the pool, look for that displacement, and then target opposing liquidity. Same deal in the daily chart. Judas swings, manipulation runs are found at the very beginning of the day, after midnight into London session. Identify your liquidity, look for those reactions, and then that's the deal, guys. And same deal, if you have a day where there's like high impact news, and what you'll see at times is, not saying you still can't get nice moves, but if there's like really high impact news, extremely high impact news, what you'll see at times is price will say that manipulation run for the high impact news. And then that's where you'll see that fake run, like it'll take its place from London. You'll see that a lot too. So you got to consider that what's on the calendar too. But yep, I think that about wraps it up though. So it's very simple stuff. There's a lot, I know people like to try to overcomplicate this stuff. It ain't that complicated. It's very simple stuff, right? And you have these signatures, and you really have a firm understanding of liquidity, premium and discount, when it should be happening, etc. You can stay aligned with it more times than not. Are you going to be right 100% of the time? No, of course not. You're not going to be right 100% of the time. That's not trading. That's not a reality of this business. And anybody who says they can be right 100% of the time is a liar. Okay? They're lying to you if they say that. But guess what? The beauty of this? You don't got to be right all the time. That's the beauty of it. Embrace that. You don't have to be. Okay? And again, I said it earlier, an edge is not 100% strike. Like it's not 100% win rate. It's just, okay, I have something that works more times than not. That's an edge. That's an edge. It works more times than not. That's all you need. All right. You're not going to be correct all the time. Don't need to be. All right. So if you enjoyed this video, leave a like, subscribe to the channel. Catch you later.